Good morning, everybody, and welcome to MarketStream.live. It is June 28th, 2017, and we are getting into the tail end of this week. We're at Hump Day, and Wednesday has occurred in Asia, so let's take a look at the action. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Let's jump right in because the tech pullback yesterday and the overall market pullback, well, that flowed right into the Asian markets overnight, and you can clearly see from the action, EEM pulled back before we even got into the overnight session. Again, take a look at EEM if you're looking for emerging markets, exposure to markets like China. You also have Australia and some other markets in there. Watch this area right here, and I'm going to focus on the near term right now, and that's the 20-day moving average. Folks, that's where the short-term bulls are going to be challenged. And if you take a look at the Japanese markets, the Nikkei is pulling back but still above. So the bulls are still in control in Japan, and Prime Minister Abe came out last night and said, you know, we may forego a balanced budget target by 2020 to allow just basically looser debt to GDP ratio targets. So bottom line is that when you have a yen that's strengthening, and you can look at the currency, that's going to weigh on the markets. You have a weak tech market, that is going to weigh on the Japanese markets, especially since they export quite a few goods and also components. So it'll be very interesting. EWJ, watch this one on the open. It already sliced through its 20-day moving average. This means that the Japanese ETF, the short-term basis, is in a little bit of a hurt right now. We're going to see if it gravitates towards that 53.26 on EWJ. That would indicate that Japanese stocks are a little bit, they're in trouble then, but we haven't seen that yet. This is the battleground. Taking a look at the Shanghai Composite, we did see a pullback overnight in the Shanghai Composite, down about 0.5%. Now, what's interesting here is that this has been one of the better performing markets in Asia over the last week or so. Coming off of its lows that we saw in the beginning of June, now we see that it's grinding to the upside. There's a lot of catalysts right now. The biggest one is that they continue to come out, and you're hearing upgrades to or forecasts that are on the GDP for China, actually coming in at around 6.7, 6.8%. The Chinese Academy of Science just came out and basically said that they believe by the end of fiscal year 2017 that they'll actually see a 6.8% GDP. So if you're looking for growth, this could be an interesting area. Again, you take all of this with a grain of salt. You're going to watch the currency action, see if the People's Bank of China continues to infuse capital. They have not done capital injection in a couple of sessions, but the market did pull back in sympathy with the global pullback after the reaction to the tech pullback here in the States. FXI, watch that one today. It challenged and actually settled below its 20-day moving average. That means that the short-term bulls a little bit on their heels in the large cap sector in China. Taking a look at Hong Kong, property names were under pressure all night in Hong Kong. That also weighed on the market as well as the tech segment. Finished down 0.6%. This was the worst performing index in Asia. Taking a look at the Hang Seng, you can see that it settled right at or slightly below its 20-day moving average. Again, short-term bulls are being challenged, but the trend is still up until you break that 50-day moving average. EWH is an ETF that you can track to utilize to either follow or actually invest in Hong Kong. Again, in that battle zone between the 20 and 50-day moving average. That's what I use to determine trend. Taking a look at India, India has been taking it on the chin. And this is the third consecutive session that we've seen a downtrend. This is getting a little bit concerning in India, especially since now we're getting close to that 20-day or 50-day moving average at 30,622. Yes, it's a couple hundred points, but we've already seen that the market has moved down about 250 points in the last three sessions. So with that being said, this has the potential to get to this level. Watch that 50-day moving average. What was weak was financials again. You continue to see financials. You saw technical consulting also under pressure. Just universally some weakness in India. This is something that you're going to want to watch closely because this has been one of the best performing, consistent performing indices in Asia. Watch EPI today. That's an ETF that tracks India. And again, this is where and you can see that EPI actually broke through its 50-day moving average yesterday. Let's see if this signals even some more weakness and see some downside. It looks like the bulls have definitely lost control in this ETF. And this ETF historically doesn't have big moves. So let's see if we start to see some larger moves in this and we have that gap to the downside that got us below yesterday after the poor tech performance. So let's see if that spills over. All right, folks, we'll be back and we'll be talking about Europe at 8:45 Eastern time here at MarketStream.live. See you then.